Most traders lose not because their entry was wrong, but because they take their profit too early and leave money on the table. If you are still guessing on where to set your TP, your take profit correctly, this video is for you. Stick around to the end of the video or play back the video so that you can understand the correct way to place your stop loss. So we are going to start with the first tip, which is to always take your trades at previous levels. Like the support is our support level and this is our resistance level. So if you took the buy here, just make sure, let me illustrate that for you guys. Let's say we took the buy. Remember, this for example an educational purpose. Backtest the strategy before risking a huge amount or going live in the market. So let's say after the close of this candle, we took the trade, we took a buy. We need to manage the trade before price get back to this level, because price reacted previously at this level several times. The first, second, third time price reacted at this level. So when you take your buys here, make sure your TP is around some of this level before price get back to the level, because there's a higher chance we are going to get a reaction. We are not saying that price cannot break above and continue up, but we might get a reaction. So it's to be in a safer position, it's best to set your TP something like this before price get to the level. As you can see, we have a 5.2 risks to reward. So this is how you trade. You set your TP at previous levels, but these are the liquidity zone. You expect to get a reaction there. So this is the first tip. So the second tip is to be realistic when setting your TP. Try to be realistic, because most traders are very greedy in the market. When they take a trade, they set something like this. Let's say they are taking a sell, they take the sell around the level and have a very big TP, something like this. So this is not realistic. We are day traders and we benefit from little move in the market. We trade for a few hours in the day. So to take a sell like this and expect price to hit your TP is not realistic. So this is not realistic. Always have a realistic TP, and as I said, look for previous level which price has been to. Like this level, price has reacted like the support or the resistance level. So this becomes our level also. This is the level we can also work with. Let's say we are taking a sell. You need to manage your trade before price come back to some of this level. So this is the best way to approach that. This is how your TP should look like, your chart should look like. If you are taking a sell, once you take the sell, make sure you manage trade before price get back down to the level. So this is the correct way to set your TP, as I said, at previous levels, either the support or the resistance or the last level that price reacted. If you get weak rejection around that level multiple times, that's the level you need to keep an eye on. So let's move on to the next tip, which never over leverage when setting your TP. Try to use the risk to reward ratio. Don't over leverage. Don't risk $100 to make $50. Don't risk $100 to make $50. As I said, use the risk to reward ratio. This helps you calculate your risks and exposure in the market. So something like this, you can see these are little risks and you can count your reward with it, the multiple of 3. So we are risking 1%, but we are making 3. So we are making 3 times our risks. So always try to calculate your risk to reward before setting your TP. You can go for a 1-to-2 or 1-to-1 depending on the kind of trader you are. If you are the kind of trader that can't hold a trade longer because you get emotional and you can't stand the fact that price is pulling back on you before going up, you can go for a 1-to-2 or 1-to-1. But it's advisable to go for a 1-to-2 or 1-to-3 risks to reward. Always calculate your risks to reward before setting your TP. Don't risk 100 to make a $50. So the next tip is know the time you are trading, because the trading hours or the session you are trading, either the New York session, London, Asian, Tokyo, know the time of your trading, because the timing also influence your result. During the London and New York session overlap, 2 hours overlap, the market is very volatile, and any trade you take at that time, because of the volume and the volatility, there's a higher chance your TP is going to be hit, because there's a lot of volume in the market. But if you take a trade during the Asian session, and because of the low volume in the market, price might be moving sideways and your TP might not be hit, price will just be consolidating. So always keep note on the time you are trading. If you are taking trade in the Asian section, make sure you go for a 1 to 2 or 1 to 3. Don't go for a 1 to 5, 1 to 6. If you are trading the Asian section, go for a 1 to 2 or 1 to 3, because there's not enough volume in the market to push the market quicker enough, unless you want to swing trade and hold the trade overnight. But it's always advisable to have a bigger TP when it's a high volume period. So keep that tip in mind. So the next tip is to never get greedy in the market. It's a very important tip. It's very obvious, but most of us, if we're in a winning trade, we get too greedy. We get too greedy in the market. Let's say we're in a buy like this. We are already in profit. We made almost a 1 to 4, but we are just greedy. We can't get enough. We are just too greedy. We can't get enough. We just want more, and before you know it, price pull back and stop you out. So before taking a trade, setting a TP should be part of your trading plan or trading rule. Before taking a trade, know when you are going to get out of the trade. It's not about just getting and setting your stop loss. Know when you are going to enter and get out of the market, because don't get greedy in the market. This is a very important rule. Most of us, even I am guilty of that, but you get discipline, you discipline your emotion. If you're in a winning trade, I'm not saying you should close your trade early, but as I said, have it in your trading plan. What's your reward in mind? What's your risk to reward? How much are you willing to risk, and what will be the reward of each of the risks you take? If you are risking 50 to make 100, that's fair, or making 150, that's okay, but don't get greedy and risk 50 to make a 500 or 1,000. That's greed. So don't get greedy. Remember, we're aiming for consistency. We're not just here to gamble and make 1,000 in a day. We're aiming for consistent payout, consistent profit in the market. Those are some of the tips I like to share with you guys. If you have any question, drop in the comment section below, and see you guys next time.